Ladies and gentlemen, welcome back to the channel. In today's episode, we're going to be going over what happened today, why markets started to perform a lot better into the end of the day today, what's coming next for stocks, and the rally that I think is coming. In the meantime, hit the like button, subscribe to the channel, and check out the link down below in the description of today's episode if you guys want to come join the trading community where we are going out in AI, robotics, quantum, biopharma, and looking for and finding the next big winners. Okay, I don't want to invest in the stock that's up 1,000% in 3 months. I want to find the stock that's going to go up 1,000% in 3 months. Okay, that's the kind of opportunity that I want to identify, investigate, and execute on. So come join us if you'd like to be a part of something like that, and let's get into today's episode. Million shares sold short, down to 72 million shares sold short. So that's what, 11-ish million shares that have been covered on. And yeah, you've seen Tesla move up in recent months, so that's not a huge surprise. But after November 6th is when things get really crazy. And that is next Thursday, by the way. Because the fact of the matter is, this market is about to rally something crazy, okay? If we take a step back, I know retail investors, like, you're working every day, all day. Most of you guys just work, go to bed, see your kids, wake up, work. Get home, see your kids, go to bed, work. Okay, rinse and repeat. So every $100 you're investing, $200, $500, $1,000, $10,000, you get the idea, is a big deal for you, right? When you're watching your portfolio go from $50,000 down to $30,000, or $100,000 down to $70,000, or even $1,000 down to $500 or $600 or $700, that makes a lot of people pretty emotional, and people just tend to react to what the stock is doing. Like, the stock is all knowing, that the markets must be doing this for some reason. Okay, that's how it seems over the years. I've just come to realize how retail investors look at the markets, right? Retail investors do not tend to take a step back and think about things from a logical perspective, okay? You always want to take a step back, obviously relax. The numbers are going to move on the screen. It doesn't matter, okay? But you always want to ask yourself, what changed, okay? What changed this week? Just let's focus on this week. What changed from last week? Well, we've gotten a lot of good news, okay? Things have definitely gotten better, okay? Trump lowered tariffs on China by 10%, going from 57% down to 47%, and the 100% tariff threat on November 1st no longer is going into effect. And you could also just say that the U.S. and China getting along in general, having a 1-year trade pause, if we're calling it that, is very positive. Okay, so that was probably the most positive thing that happened this week. Okay, or at least it's up there. I think if that news alone had came out 2 months ago, markets would have rallied aggressively on that. Okay, and we do have some more headlines to get into in just a moment that is in regards to U.S.-China trade and potentially lowering tariffs even further. So that's a definitive positive. The Fed, they told us they're data dependent. They're not on a preset course. They say this pretty much every single time Jerome Powell speaks. Okay? Nothing new came out of the Fed. Besides, they ended QT, which is selling assets onto the markets, keeping interest rates higher. Like, the Fed does not determine what your mortgage rate is. The Fed does not determine what your auto loan rate is. Okay? The Fed only really, quote unquote, controls like 1 to 3 year bonds. If you're getting a business loan, a home loan, an auto loan, that is determined by the markets. Okay? Like, that's a market thing. That's an investor thing. Okay? Well, The Fed, when they're selling a 10-year treasury bond, they're putting downside pressure on the price, which is pushing the price down, which is driving the yield up. There's an inverse correlation. So you're driving price down, yields going up, that hurts the economy, that hurts the credit markets, that hurts consumers, okay? The Fed no longer selling those assets, actually starting to buy some assets in small quantities is QE, which actually helps to keep yields lower and keep bond prices higher. I know, sounds complicated. All you really need to know, QE is bad, or QT is bad, QE is good. The Fed ended QT and started mild QE. Definitive positive, okay? So, two big positives just this week alone. But wait, we had earnings. Oh, everyone was terrified about earnings and hyperscalers and AI. All of them beat the numbers. All of them did very well, okay? All of them raised AI CapEx budgets, okay? That is another definitive positive. So what's holding this market back from really, going parabolic into the end of this year? Because we know the S&P tends to go up 4% in the last 10 weeks of the year, and just so far that really hasn't been happening, okay? At least not in our portfolios. And let alone all this other good news, you should probably go up more than 4%. It's likely the government shutdown, okay? Every 2 days you have Scott Bessent that comes out and says, look, the government shutdown is really hurting the economy at this point. That doesn't sound great. Now, a lot of Wall Street, they love BLS data for whatever reason. I could give a shit less about BLS data, okay? I like earnings, Visa, MasterCard, Capital One. What are the lenders telling you? What are the banks telling you? What are the credit card companies telling you? Okay? What's Walmart telling you? Target, TJX. That is more definitive to me in judging how the economy is doing. But Wall Street doesn't see things that way. Wall Street doesn't see a lot of things the correct way. So they're a little nervous because there's not economic data. It's harder to forecast what the Fed is going to do, or, where the economy is at, blah, 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 where the labor market's at, okay? Once we can get the government open, which is probably within the next 2 weeks, there's going to be a major headwind taken out of this market. And it is going to lead to a tailwind that, mixed with all of the other news we just talked about, the positive changes, it's going to lead to this year-end rally, let alone the positive seasonals. There's not a lot holding this thing back. And I think you started to see, again, some of that rally today. Portfolios were definitely looking a little bit better. Let's say that. Hopefully yours was as well. Ours definitely were. I think mine was up like 10% today alone. So definitely looking a little bit better there. But into the end of this year, that's when things get aggressive to the upside. But you definitely want to see the government reopen to release the last bit of uncertainty, the last bit of nervousness. Morgan Stanley says that consumer goods sales are expected to stay weak. This was a very good headline today that seemed to help the markets. About time the markets react appropriately to news. But Trump on China says, I would love to get rid of the extra 10%. Trump fishes, okay? I don't know if the guy's ever went actual fishing in his life, but he fishes in this market. He loves the markets. He loves to just have an influence in the markets. And he says shit like this to see what kind of a reaction the markets will give him, okay? So he put this one out there. He fished. The markets liked it, okay? Wouldn't surprise me if we actually get an ending of the additional 10% tariff on fentanyl on China pretty soon. Now, a U.S. judge rules the Trump administration's plan to suspend SNAP food aid benefits during the shutdown is likely unlawful. Now, this is actually something I think the markets took quite well today also, because Again, 41 million Americans not having food. What kind of a financial impact does that have? Really hard to quantify, but you'd argue it can't be a good impact, right? You can't, I mean, like food companies, grocery stores. I don't know how you'd actually quantify that and put it into numbers, but it did appear like Wall Street was a little nervous that 41 million people were potentially not going to eat. I mean, that's doesn't sound great, but again, hard to quantify the financial impact on the economy from that, but it can't be good. So it looks like SNAP is going to stay open. Now, a U.S. judge directs the administration by Monday to say if it will authorize at least a reduced SNAP benefit for November. Trump says, I am always willing to meet with Democrats. Trump to reporters in Florida said all Democrats have to do is open the government. And a judge in Rhode Island says, I will block the Trump administration's plan to suspend SNAP food aid benefits during the shutdown. And 2 U.S. federal judges have ruled that the Trump administration's decision to suspend food aid benefits during the government shutdown is likely unlawful, and officials must use contingency funding to make SNAP possible during this time. White House senior advisor Hassett says, I disagree with the judge's SNAP ruling. Hassett says that Trump is urging the Senate to consider other options. Hassett says we have a clear legal mandate to keep funds aside. Hassett says that job creation and income growth are still positive. Fed Waller says inflation expectations are anchored. Fed Waller says we should proceed on policy based on what the data is telling us. Fed Waller says we know the labor market has been weak. Waller says we should look through tariff-driven inflation. Waller says excluding temporary inflation effects, PCE inflation is running at 2.5%. Fed Waller says inflation is coming back to 2%. The biggest concern now is the labor market. Fed Waller says we have a lot of data despite the government shutdown, which is kind of appealing to investors because I think a lot of investors are like, hey, we're flying blind right now. The Fed is flying blind. They have no idea what's happening out there. And Fed Waller says we do have a lot of data. And they're not exactly flying blind. Waller says, if the president asks me to be the Fed chair, I'll say yes. And Trump will sit down with CBS News in the first interview after lawsuit. Not sure which lawsuit at this point because there's been a lot of them. But yeah, we should be getting an interview from Trump in the next couple of days. So yeah, we did have a good day today. I think there's still a lot of bearish investors out there, and I think that's what's ultimately going to help fuel this market to the upside. We do want to see the government get funded. I think that's the last big obstacle before we're looking at some very dramatic upside into the end of this year. Can stocks do well if the government shut down? Of course. But it becomes harder and harder the longer it goes on because a government shutdown does damage the economy. Okay. Well, Thanksgiving is a big date to watch, okay? Because of traffic, air traffic, okay? And getting people to their destinations. It's going to put a lot of pressure on senators and lawmakers if airports are bogged down. Okay, that's going to be a big problem. I think Scott Bessent said that they would like to see the government opened before Thanksgiving because it would be pretty much a disaster. Okay, so probably by Thanksgiving, hopefully sooner, the government will be reopened. And I think the markets are going to move a lot based on the government reopening because we have basically all of the other pieces to this puzzle. China tariff situation has been solved. Uncertainty around earnings and AI have come in better than expected on all fronts. Sure, we got a Fed that is data dependent, but cut rates and ended QT and started low-grade QE. All of these things are a quantifiable positive that has changed in the past week. Yes, markets went up a little bit today, but not nearly as much as you would expect, given the degree of good news we got. So what does that mean? Something else is holding this market back. And when it does get solved, you're going to be in for an aggressive upside rally. And that is likely the government being shut down. So when that opens, hey, I think we're going to have an aggressive year-end rally on our hands. So hit that like button as well as subscribe to the channel. Let me know your thoughts on this down below in the comment section. If you guys want to come join the trading community, check that link out down below as well, where we are going out every day to find the 1000% winners before they're 1000% winners. Okay, we want to be in these stocks when they're unloved, when nobody likes them, right? Or at least not everyone likes them. We want to find the 1000% winners, invest in them before they're 1000% winners. Okay, I have no interest in chasing the hottest stock. So if that's what you do, if you like chasing the hottest stock that's up 1000% in 3 months, yeah, it's not really my strategy. Okay, I'm a quality bottom fisher in the right areas like AI energy, right? Quantum, robotics, biopharmas, in main themes that are going to be in bull markets for the next 10 years. We want to find the high quality names that Wall Street does not know about in large, that are undervalued, and make decisive investments in those companies. These are not short-term trades per se. I give them really a 12 to 36 month time horizon. If things don't pan out in that time, they're probably never going to, okay? Or it's probably not worth holding it for 10 years. So yeah, that's kind of the core strategy, what we are doing. If you guys want to come join us, check that link out down below. Get yourself $100 in your choice of free stock when you sign up with that link with Public and deposit $1,000 and fund your account. But yeah, you guys have a great weekend, and I will see you in the next one.